Welcome to TradeTheNBA.com. This is John. This report is for the 5th of July. Well, and you can see we had no activity other than just early morning futures for the 4th, and hope everyone had a great 4th of July celebration. Market continues its push. You had a bunch of weak data come through with manufacturing, payrolls, everything suggesting that well, at least gives cover to the idea that Powell can get his rate cut, though no evidence that inflation in any way, shape, or form has abated in any way. So it's an interesting one. Yes, you're seeing signs of slowing, but that's exactly what stagflation does. From a DOC standpoint, you can see signing clearly under red. That's a strong move, no question about it, and still steel continuing to drop. So plenty of well, we expected this with the new money coming in at the beginning of the month, and there it is. So continuing to push. Will it end? No, because there's so much confusion and paralysis as far as government goes. The market's free to continue, and they know that their expectation is that rates will go to zero, and they've been told this, and they're convinced of it, and that's driving things. And besides, where else are you going to put your money? Again, it gets back to that same situation. You're certainly not going to go into treasuries. They jump up with this expectation that that softness represents, the story that rates are going back to zero. Your smarter buyers were at least down at the bottom here, where they recognize that you want to get the best yield you can, particularly if the Fed does intend to go to zero rates, which that was always their hope to do before the election. Kind of running out of time at this particular stage, and that confusion that was set up after the debate has just thrown everything into crazy time. But this is the story right here. Oil. Yeah, we're back to our peaks near April, and we saw what happened to consumer prices after that. It's not going to be any different this time. They keep talking about deflationary situations developing. How? How? You're just going to have fewer buyers. That's all you're getting. You're just moving more people down the scale of purchasing capability, which just hurts earnings, which is another one because throw valuations out. I mean, all of this is about currency debasement and elevating the price of the market based on that debasement, and it's something we've talked about before. I know it seems counter to what a lot of people expect because they know that earnings are going to be fading off, at least for a broad sector. I mean, you see what's happening with retailers all across the board. They're suffering. Real estate having its difficulties as well. And that compounds itself because it goes into construction and everything else. And you saw the largest number of construction worker layoffs. So, yeah, there's problems. So this is a huge boon for the euro, as you saw in the eurozone. This is a continuation of the fact that, well, if rates in America go to zero, then the euro is going to be doing so much better. It's no better in the eurozone. It's just a relative case. And in this particular situation, they need to keep that elevated because European banks are worse than American banks. And they've got to do something for the American banks because they're really underwater. Despite their assurances, now there are several banks that are fine, but the broad, vast majority of them have difficulties. This is nothing but a boon for gold. There's no other way around it because as the disparity of rates in that gold becomes the alternative along with the market, of course, most people are going to want to be in the market because they've never really bought into the idea of gold. That's just something central banks keep buying and buying in record amounts. Um, well, I had marked this for Bitcoin in that, which were there positive extreme fills, and ta-da! Wearing my American flag today, in case you didn't see it here. Yes, good old patriotic move there. But Bitcoin, that move fills positive extremes. Uh, out of order? No, we knew the positive streams would fill. It was just a question of when. And this gets back into that Mount Gox settlement and the extra supply and everything. And you knew there was going to be a pullback to potentially handle that liquidity issue as they think that there's going to be a significant selling from that disbursement. From an ETH standpoint, we didn't mark the positive extremes for that, but they go a little bit further, all the way down into the 25 range. So more room to go. So ETH has been outperforming a little bit stronger, but we have faith that it will do exactly as the market suggests that it will do. And when we look at our 50K, you can see that's just all green all the way. And it started early. There was the potential with this, and when you see that where the white MBI spikes, but you still have magenta rising, that's an indication that you've got some mispositioned shorts, and they're the ones that get forced into that cover, and that usually creates that strong move. When you don't get the follow through with that magenta fading, it's a clear indication that things are going to continue. Now, will they resolve their way back? Yeah, but until we see it from a signaling standpoint, you can see it was congruency from that shakeout down here once we got to the peak, which was midway up here, and it's only accelerated from there. And cyan under red, so all of that's pretty straightforward and clean. Nothing to complain about. That's why we stick with the readings, despite what you see from malaise, and that the market is looking at the fact that, at some point in the future here, they're going to have just free cash to continue to escalate things. As we move up into the July 4th, you can see that was just a lot of back and forth. There was some intraday fade stuff, and this again gets back into the option situation. But here we are in our post-market all advance all the way forward. Nothing but a rise from that. So they just flipped the script on them and continue to move it. And that's where we stand right at this particular point. So pretty clear from a reading standpoint. It's just a matter of sometimes you have to ignore what you see taking place and follow what the readings are, because that's what the money's doing. And it's got to go counter to the culture of where thought is. But again, this idea that rates are going to fall to zero, which means just exuberant amounts of money, and that case for 6,500 or more on the ES, not out of control. It's really going to depend some on how things evolve politically in that, and whether there's going to be significant change as far as that goes, or if it stabilizes. We let that stuff play out, and we're going to see it all in the readings ahead of time, so it's not really a factor. As always, though, anything relevant, I'll put it on the Skype chat. Have a good one. Trade well.